Hello everyone, welcome back to the channel Investors Cube. In this video, we're going to talk about the things banks don't want you to know. Before starting this video, like this video and subscribe to our channel for future updates. Why do you put your money in the bank? Seriously, think about the answer to that question. You do it because you just do it. You've always done it, because everyone has always done it, but why? Whether you're spending money or saving it, banks have plenty of sneaky tricks which they employ to milk you for the most cash they possibly can. Here are 20 to watch out for. Before we get into this video, allow us to mention that nothing mentioned in this video is financial advice, and we are not financial advisors. We would recommend you ensure that you conduct a due diligence process before making any decision that may affect your financial portfolio. If you are looking forward to seeking external advice, head out to your trusted financial advisor who has a clear idea of your financial situation. Having said that, let us get into this video. Number 1. You won't always get the rate advertised. Lenders are not always required to offer the rate advertised to all successful applicants. They may only have to offer that rate to a certain percentage of those who have been approved, with the rest offered a more expensive deal. Number 2. Your bank account isn't worth the money you're paying for it. Some bank accounts offer a range of added extras, like free travel insurance in addition for a monthly fee. But unless you use all of the extras on offer, the account is probably not worth the money you're paying. Go for a standard current account instead. Number 3. When you swipe, they cash in. When you spend using your debit or credit card, the retailer is charged a fee for processing the transaction. Most of that fee goes back to your bank, so even if you are spending your own money, the bank is still better off as a result. Number 4. No debt history is not a good thing. When working out if they want to lend to you, a bank will look at your financial history. If you've never used credit in the past, a loan or credit card for example, they don't know how good you'll be as a borrower, so no history may be worse than a less than perfect one. Number 5. They could reorder your purchases. Some banks will reorder your purchases in a day from the highest amount to the lowest. That means that if you fall into your overdraft and your bank charges a fee for each transaction made while overdrawn, you will end up paying more fees. Number 6. Running deposits lasts. Let's assume you pay cash into your account on the same day that you have a load of payments due to come out. Banks may run those payments first, meaning you fall into your overdraft and have to pay overdraft fees before running your deposit, which will bring you back into the black. Number 7. They might sit on your check. It can take many days to get your check to clear into your bank account, with banks able to delay the process for a number of reasons under the guise of ensuring everything is above board. This delay can easily see you fall into the red and have to pay yet more overdraft fees. Number 8. You don't need that insurance. When you take out some form of credit, the bank will often try to sell you some insurance to cover your payments in case something happens to you. In any case, the important part of these protection strategies might imply that it will not really cover all of the obligations in the event that you can't. You're better off making other plans. Number 9. Paying your debt off early will cost you more. With loans and mortgages, you'd think that paying off your debt ahead of schedule would be a good thing, but many lenders will slap you with an additional charge for doing so. Number 10. Closing an unused credit card could hurt you. Banks look at your credit utilization rate when considering any application for further loans. They want to see how much of the credit at your disposal you are using. If it's too high, you may look desperate. Closing an old card could push that rate up, denting your chances of approval. Number 11. Your mortgage bill could go up even when rates don't. Some variable mortgages are not actually tied to the central bank rate, so your lender could put up rates even if the base rate hasn't moved. Number 12. Watch out for mortgage fees. Never mind the interest rate, banks really cash in on the many fees that come with your mortgage, from administration fees to exit charges. Make certain to peruse the important parts so you know precisely what extra charges you might need to pay. Number 13. There's no such thing as free banking. Even if your account doesn't charge a monthly fee, it still isn't really free. Whether it's fees for dropping into your overdraft or the non-existent interest paid on your credit balance, we are all paying for our accounts, whether directly or indirectly. Number 14. Banks rely on your laziness. The best deals are saved for new customers. Banks are depending on your indifference towards routinely looking and exchanging accounts, meaning you miss out on the best deals. Number 15. Your old debt might be your most valuable. The longer your credit history, the better. Banks want to know that you have experience handling debt, so closing your oldest credit card might not be a good idea. Number 16. Your money might cost you money. In some countries, you'll have to pay a fee if you withdraw money from an ATM that's not run by your bank. Number 17. Using your card abroad could cost you a fortune. Many banks will hit you with a wide range of expenses and charges in the event that you utilize your card abroad. You're generally in an ideal situation switching around your burning through cash well ahead of time. Number 18. Saving rates won't keep going forever. Banks are known for teasing you with an extraordinary beginning rate for your reserve funds, just to cut it strongly later on. Make certain to keep on top of precisely the thing you're getting. If it drops, move. Number 19. Don't change your holiday money up at the bank. When sorting out your holiday spending money, banks often offer some of the worst exchange rates. Use a specialist currency exchange firm instead. Number 20. They want you to make a mistake. Banks don't offer interest-free credit cards out of the goodness of their hearts. They are betting that you will make a mess of your repayments and end up with debt still to pay off when the 0% deal comes to an end, so don't slip up. That is all for today's video. Thank you for watching. If you found this video informational, please consider hitting that like button, subscribe to the channel. Make sure to press the bell notification to never miss out on new updates from us. And also don't forget to take a look at our investment opportunities in the description. We will see you in our next one. Till then, goodbye.